Hey guys, are you looking for a global investment opportunity? Do you want are you not sure where to invest in around the world if you're US based? Well, I got together and I've researched a lot of other investors around the world, what they like as far as countries, emerging markets, etc., etc. And I kind of put my own little twist to it because, I like yield. So this is a pie that I created. I have not invested in it yet. Not sure if I will. I'd like to if I can dump a whole bunch of money into M1. But what this is a global, diversified pie that consists of about 8 ETFs and 2 closed-end funds. Now, what you'll find here is it has 10 holdings. It has a 5.85% dividend yield, and it does have a high expense ratio. And the reason for that is because of the closed-end funds. Now, not just the closed-end funds, but if we're investing in international markets, a lot of times ETF providers, it costs more money to invest globally or outside of the US. But the closed-end funds definitely put a strain on the expense ratio. But I'll share with you the 10 holdings. And the first one is a closed-end fund, which is one of my favorites. And it's a Cohen and Steers infrastructure fund. That's a hard word to say for me. I don't know why. It's kind of like volume and volume. I don't know which one's which. But it has 207 holdings and 50% US stocks, 35% non-US stocks, and it has some preferred stocks in there as well. And you can see their top holdings. Not all of these will show top holdings, but this is Crown Castle and NextEra Energy is the top two. Offers you almost a 7% dividend yield. Pays you monthly, and that dividend has grown somewhat over the years. We used to pay quarterly, and then now it pays monthly. And a good return with a 7% yield if you can buy these closed-end funds on a dip. If you don't know what closed-end funds are, I'll try to link a card to show, because I did a kind of a closed-end fund basic video. And I'll see if I can remember to do that. Next up on the list, VNQI is the ticker symbol, and this is a real estate ETF. It's basically Vanguard's VNQ, but it's international, and it excludes US. So what this means, Vanguard Global, basically excluding US real estate ETF. This has a 7.78% dividend yield, and it has paid that pretty consistently. You'll find also with international ETFs is that their dividend payouts fluctuate quite a bit. So, you're not going to get a even, okay, you're going to expect, like 50 cents a quarter or something like that. It's going to fluctuate quite a bit depending upon their performance. So VNQI has 614 holdings, and it's 95% non-US stock. Next up is an interesting one. This is a closed-end fund as well. This is the India Fund. It has 41 holdings. It does not show what their tops are, but it has 11.5% dividend yield. If you know about CEFs, this is trading at a discount right now, kind of a 52-week low on the discount. Now, one thing with the India Fund is you may get turned off by this when you look at a 5-year chart, because it's saying it's down 30%. But what I've figured is that it's hard to value this with this 30% drop, because this India fund actually since 1995 has outperformed the S&P 500. And I'll bring up a chart here and show you. So this is with $10,000 investment in the India fund in 1995 versus a $10,000 investment into SPY into 1995. And you can see the total return. This is with dividends reinvested. The total return of the India fund is 929% versus the S&P 500, which has a total return of 771%. Now, if you didn't reinvest the dividends, it's a lot closer, and SPY beat it by 0.1%. So sometimes you can't discount what's going on. You have to look really at why it's happening. Like, for instance, if you look at some of these dividends paid out, $1.70, 62 cents. There was a big one. Where was it? Right there. You got dividends in 2017 of over $5 out of this fund. So it's kind of hard to, if you just look at this only, it's going to be kind of deceiving. So that's India. I think India is going to be a big market in the future. Next up is a broad market ETF, and that's the IEMG, which is the Emerging Markets ETF. It pays almost a 3% dividend yield. Pretty flat for the 5-year chart, but it has 2,271 holdings, and their top holding is Alibaba. So that's there's going to be a little bit of overlap with this and all these other funds, because this is a broad market ETF. Next up is Singapore. Singapore ETF, ticker symbol EWS, is a it just concentrates on the Singapore market, and they have been kind of consolidating sideways for years now. But they do have some China trade war pressures. But like they say, you don't make money. You make your biggest money in a down market or a consolidating market, because when it decides to take off, then you're good. But this pays a 4.6% dividend yield, has 30 holdings, and it does not give its top holdings, but it's basically a bet on Singapore. Next up is another one, ticker symbol EZA, and that's the South Africa ETF. It pays a 4.66% dividend yield, and it's been, of course, consolidating again. It pays out some very wide range of dividends. Like you can see, its last dividend in 2019 paid almost $5 a share. But it has 55 holdings, and it invests in South African companies. And if you guys know, China is making a big push into Africa, and I think Africa also is one of those emerging markets that can really take off in the future. Next up is one most of you are familiar. Whoa, that was a weird voice. Most of you are familiar with, and that is VYM, Vanguard High Dividend Yield Index Fund. This is domestic. This is U.S. stock. A little bit of non-U.S. stock. Has 425 holdings. Pays you a 3.24% dividend yield. And its top holdings are Johnson & Johnson and ExxonMobil. So this is going to be your American exposure. And as you can see, it's from the left to the right on up. Next up is the same thing, but it's going to be international. So it's VYMI, which is the international version of VYM. And it pays a 4.39% dividend yield. And this focuses on not emerging markets, but developed markets. So non-US stock of 96%. And it's going to be, probably the most popular yielding companies in the international market. Next up, this is RSX, which is a Russia ETF. I think this one is the large cap Russian ETF. It's had great performance over the past 5 years, paying out, small dividends, 5.76% yield. I think if I if I can remember off the top of my head, this is going to have a lot of energy companies because Russia is big on that. And, Russia is one of the biggest countries out there, so you got to pay attention to some of these. And this one is the Russia small cap. Huge performance out of the Russia small cap. 4.35% dividend yield, 34 holdings in that. It is non-diversified. So this is it. This is a global diversified ETF, CEF pie that if you are an income investor and you want a 6% dividend yield and you think you want to invest worldwide, this would do good with a combination of maybe VOO as your main pie and then this as a supplement to it, or as a supplement to all the stock picking that you do, and you need some more, you believe in the international emerging and developed markets, then this is something that could possibly fit very well. I think it's great because of the high dividend yield. You can get some growth out of some of these, Singapore and South Africa, and the emerging markets in India. I think you can get some really good growth out of that in the next decade. So anyway, I just thought I'd share that with you. It was something I've been researching lately. I don't know if I'll add it to the pie personally. I may, if I get a good chunk of money and I can throw at it, I might do that. So anyway, any comments and questions, leave them down below and we'll talk to you later. Thanks. Bye-bye.